The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
And joining us now to discuss the crypto markets is none other than Wave Financial Head of Protocol and Treasury Management, Nauman Sheikh. Welcome back, Nauman.
You're back.
So, we're seeing Bitcoin, of course, trading close to the $16,000 mark. Right now, it bounced a little bit, or it broke a little bit below there into the 1500s. Is this a sign of more bad things to come for those people who are still holding on to hope?
Yeah, look, it's short term. It's a really challenging environment at the moment. Think about it. You have 1 million creditors that had their funds stuck in FTX. That's, top 50 comprise around $3 billion. And what's the first thing that's going to happen is any liquid part of their portfolio, it has the potential to just be sold to make up for any sort of, withdrawals or LP recalls, or just to kind of balance out what they've lost. And we already saw that happening last night. There were a bunch of wallets across different funds that started selling ETH in the market. ETH gap down. There's not enough liquidity in the market post FTX anyways, because everything's so thinned out. Market makers have retrenched, funds have retrenched, volumes are really, really light. So any sale in this market is just, will have a greater impact. And make no mistake, there's a big overhang in the market at this point.
Yeah, we had a story overnight regarding the addresses holding Bitcoin. I believe this was from Omkar Godbole on CoinDesk, saying that most of the addresses holding Bitcoin, they've lost money. And this is for the first time since March of 2020 that the majority of Bitcoin addresses are into the red. That's according to data from Into the Block. So, you don't sound all that optimistic that they're going to get out of this anytime soon, correct?
Yeah, look, they've lost money on a mark-to-market basis, but long-term holders are still accumulating. There've been exchange outflows in Bitcoin. So over the long run, I'm still really optimistic. It's just the short-term overhang is pretty dangerous at this point, because it's when you're a forced seller, you're not really looking at long-term fundamentals. You just sell what you can. And in this situation, this is exactly where we are. We're like deers in front of a headlight. Everyone's laser focused on contagion risk, and what is next shoe to drop. And in this sort of environment, you will sell whatever you can just to kind of reach safety.
So speaking of shoes to drop, none other than our sister company, because we're both owned by DCG. I'm talking about Grayscale. Grayscale's Bitcoin Trust. The GBTC is now trading at 45% below the asset value. It's as if you could buy Bitcoin at half the price. But there's a problem, and that, of course, is that GBTC, that Grayscale announced that you can't withdraw GBTC. They're stopping customer withdrawals from its lending unit. Again, this is, where do we go with this? This is not a good sign. I take it, correct? Is this a general risk for the market, and what's causing this discount? Why is it so steep? Is it because there's this fear that people might not be able to get their Bitcoin or redeem their tokens?
Yeah, first of all, GBTC is not fungible with Bitcoin. You just can't buy GBTC and convert it to Bitcoin because it's a trust structure. Secondly, GBTC has been used as collateral for a lot of these loans. And what happens when you have to liquidate collateral to make up these loans? You have to sell GBTC. So GBTC has been on a downtrend for months, if not years. So the discount is a function of market sentiment, but it's also a function of for sale. The Grayscale, like you mentioned, the golden goose of DCG, in my opinion, that is the greatest risk to the market, depending on how this all plays out. And that
GBTC being used as collateral for lenders such as Genesis,
or such as maybe other funds, etc.
Also, DCG company. So this could be a cycle, a vicious cycle.
Right. But even a worse cycle could be if they had to choose between dissolving Grayscale, in which case the terms of a dissolution for Grayscale dictates that you have to sell the underlying Bitcoin in the market and then deliver cash. You can't deliver Bitcoin. And if that is the end result, then I fear that's the worst case scenario for the market, because then they hold $10 billion of Bitcoin, $3 billion of ETH in the trust structure. And if they're forced to liquidate, and that's what's going to happen. So GBTC is the least of my concern. It's really the dissolution of the trust. I doubt that will happen. Likely, it's a cash cow. So if they had to sell Grayscale to another sponsor, they could. That's probably a better option for them to do so, and just maintain the company as a going concern. It's cash rich, $250 million a year in fees. The multiples are not high as they used to be. It used to be like 8 times they could fetch. Now it's probably like 3 to 4 times. It's something that they can think of. Yeah.